Hi students, how are you all? I am Bhupati from the Department of Commerce in Bharathidhasanar, Matric, Higher Secondary School, Arakkonam. Now I am going to teach 12th Standard Accountancy Chapter number 2, Conceptual Framework of Accounting. What are the concepts are followed in the accounting? Before entering the concept, we just recall what is accountancy. Accountancy is a systematic knowledge of recording, classifying, analyzing the and interpreting the financial information to know about the financial status of the company. Now, Nanda, who is the father of accountancy? Correct. Mr. Luca Facioli is the father of accountancy. Now, we enter into the concept of conceptual framework of accounting. We will see one by one. Then, accounting concepts and conventions. What is the concepts and conventions? What are the rules and regulations are followed while recording a transaction? First one is the business entity. What is business entity? Nanda? Correct. When you start a business organization, the management and ownership are separated because the owner's personal transactions are not recorded in the books of accounts. It is called business entity concept because when you establish a company, the ownership are given in the hands of the management, but the management, the control will be given in the hands of board of directors. That is called business entity concepts. The personal transaction, personal activities of the owners are not recorded in the books of business trans. So only the business transaction, business activities only recorded in the company accounts. This is called business entity concept. Second one is the money measurement concept. Vignesh, what is the money measurement concept? Correct. What are the transactions measured in terms of money? It will be recorded in the books of accounts. The non-monetary transactions are not recorded in the books of accounts. For example, the managers when a quarrel between purchase department and sales department, it will not be recorded in the books of accounts because there is some problem may be incurred faced in the department in any organization. This will not be recorded in the books of accounts. When you appointing a new manager, his manager is a tall person, height persons, he is a thick persons, thin persons, he is a white persons, he is a black persons. The personal features, the personal characters of the any employee is not recorded in the business transaction, but the salary of a manager is recorded in the books of accounts because the salary of a manager will be measured in the terms of money. So the money oriented activities will be recorded in the books of accounts. When an employee met an accident in the production process, it will not be recorded in the books of accounts because whatever happened in the business production process, he may left his hand, leg, or he may died in the process. But this is not a money measurement concept. But how much of income, how much of compensation paid to the workers, it will be recorded in the books of accounts because when a money is transferred from one person to another person, it will be recorded. So this is a money measurement concept. Next one is the going concern concept. When you start a business organization, is it start for a particular period? Is it 1 year or 2 years? No. The business will going so many years. So the business transactions are continuously recorded in the books of accounts. Next one is the cost concept. Whatever the transaction happened in the business organization, that will be recorded based on the how much of cost incurred in the transactions. So this is a product will be produced in the cost of 10 rupees. It will be sold at a future at 20 rupees. In which amount it will be recorded, sir? It will be recorded on cost basis. How much of cost incurred to produce a product means 10 rupees. So the product of cost of a product is 10 rupees. The 10 rupees value is recorded in the books of accounts. The saleable value, future value is not recorded in the books of accounts. Next one is the dual aspect. What is dual aspect? Nanda, tell me, what is the dual aspect? Correct. In each and every transaction have two aspects. First one is the debit, second one is the credit. So in each and every transaction have two aspects, debit one and credit aspect. When transaction happened, both debit is equal to the credit. So each and every transaction, debit and credit of the transactions are recorded in the books of accounts. That is called dual aspect. See the second one, periodicity concept. What is periodicity concept, sir? It is nothing but the business transactions are recorded from 1st April to 31st March. Within 1 year, the whatever transaction happened in the business organization, that will be recorded in the books of accounts. Apart from the 1 year or before from the 1 year, whatever transaction happened, that will not be recorded, because we are preparing a financial statement for the only 1 year, that the concerned year, that start from 1st April to 31st March. That is called periodicity. Period means accounting period that start from 1st April and ends with the 31st March. Next one is the matching concept. What is matching concept? The organizations are compare, match with the revenue and expenses. The organization earning money by providing service to the consumer and spend expenses to the employees who are working in the organization. So the company or organization match revenue with the expenses, it will give the profit or loss. That is called matching concepts. Expenses are matched with the revenue or income earned by the organization. Next one is the realization concept. What is realization concept? It is nothing but when the goods are sold to the consumer, how much of income, how much money earned by the organization, how much can be realized from the product and the sale of a product. That is called realization of concept. In realization concept, the cost or future value of the product is not considered. When you sold the goods to another person, how much money can be realized from the product is called realization concept. Next one is the objective evidence concept. In each and every transaction of the business organization should be recorded in the books of accounts and accounting. That accounting informations should be a full and thorough informations are given in the books of accounts. That will be given a objective evidence. Whatever disputes may be faced by the organization in future, the evidence will support to the transaction. Second one is the accrual concept. What is accrual concept? Any expenses or income, whether paid or received or payable or receivable in future, that is also recorded in the books of accounts, because the company sometimes face the cash transaction, sometimes it involve the credit transaction. Both cash transaction and credit transaction will be recorded in the books of accounts. Next one is the convention of consistency. What is consistency, sir? Consistency means permanent. So the permanent accounting rules and regulations are followed by the each and every organization by 1 year. So in so many years, so many decades, the companies are following the same rules and regulations. Consistency means permanent, same. The same rules and regulations are followed by the organization every year. That is called convention of consistency. The rules and regulations are continuously followed organization by same. Next one is the convention of full disclosure. What is full disclosure, sir? When a transaction happened in the business organization, the bookkeeper, accountant should record the information in fully in the books of accounts, because both debit and credit aspects are written in the books of accounts that give the full information about the transaction in the business organization. Next one, the convention of materiality. Materiality means information that books of accounts, whatever happened in the business organization, that should be recorded in the material. The material will be useful for further usage. Next one is the convention of conservatism or prudence. Conservatism means in business organization, all the organization should expect losses and don't expect a profit, because the profit may not be happen in the business organization, but the losses should not be happened in the organization. When organization focusing the loss of the organization, that will removed by a remedial actions taken by a organization. When the losses of the organizations are reducing step by step, the profit of the organization will be step by step. The organization will go to the upstairs top of the world. Next one is the accounting conception, concept and the concepts. We already see that. See the next one. The realization concept, objective evidence, we already see. Next one is the accounting standards. Accounting is the process of recording, classifying, analyzing and interpretation of financial data. And what is the standard, sir? Standard is nothing but the basic norms which are issued by the specified authority organization, which should be followed in the books of accounts. So accounting standard means what are the standard fixed rules and regulations are followed in the books of accounts. We will see one by one. Accounting standards provide the frameworks and norms should be followed in the accounting, so that the financial information of the any different enterprises can be comparable. So all the organizations are following a standard accounting, that means accounting standard, worldwide acceptable standard. The accounting standards provide a basic norms or rules and regulations which should be followed in the books of accounts. When all the organizations are following same accounting standards, it should be useful for comparing the performance of one company with another company, or 1 year performance with compared with so many year performance of the same company. See the second one. The accounting standards are nothing but it's a written policy document issued by the expert accounting body or government or other regulatory body. So these accounting standards are, it's a written document policy. It is given by the expert accounting body. Who is that expert accounting body? Is nothing but chartered accountant. Chartered accountant, these persons have experience and intelligent persons form a group of persons form a accounting body that are government body or other regulatory body will framing a accounting standards with covering the aspects of recognition, measurement, treatment, presentation, disclosure of accounting transaction and events in the financial statement. So in financial statement, what are the information should be followed by each and every accountant in the organization, that should be given by the special expert accounting body or government or regulatory body. These persons give the accounting standards in the organization should be followed. Next one is the need for accounting standard. For what purpose we need the accounting standard followed in accounting, sir? First one is the to understand the financial statement of the business organization. So what is the financial standard? Is it weak or is it strengthen the financial performance of the company? So to understand the financial statement of the company, the accounting standards are very useful. Second one, to follow the uniform procedures and practices. So on worldwide following the same rules and regulations, same procedure, same practices, the accounting standards are given to the business world. Next one is the comparison of financial statement of various firms in the organization. In each and every organization, they compare their financial performance with so many companies, and single company can evaluate, can check the financial performance with so many years in the current year. Last one is to meet legal requirements effectively. In each and every organization should prepare a financial statement and following the accounting standards, and then submitted to government and paid the concerned tax amount to the government. It's a legal requirement of the government. Next one is the international financial reporting standards. Standards means rules and regulations. So what are the rules and regulations should be followed in financial reporting of any company in international level? So what is that? What is the rules and regulations should be followed when you preparing a financial report financial statement of any company in international level. So worldwide acceptable rules and regulation prepared in the preparing of financial reporting, that is called IFRS, International Financial Reporting Standards. First one is the International Financial Reporting Standards are issued by the International Accounting Standard Board, that means IASB. IASB means International Accounting Standard Board. The informations, the rules and regulations are issued by the International Accounting Standard Board, issued worldwide acceptable rules and regulation for preparing a financial statement of the company. Next one is a IFRS is a set of international accounting standards stating how the particular type of transactions and other events should be reported in the financial statement. So in each and every business transaction financial statement, how the transactions are recorded in the books of accounts and what are the transactions should be recorded in the books of accounts and how presented the information in a structured, well defined manner in the books of accounts. Next one is the IA is acceptable worldwide and to improve the financial reporting internationally. So the international accounting standards are worldwide acceptable and also which provide a how to improve our accounting standards in worldwide. This is the next one. Then this is a worldwide, sir. What has happened in the India, sir? The accounting standards in India. What type of accounting standards are followed in India? Then who will issue the standards, sir? Is nothing but Institute of Chartered Accountant of India. In India, the accounting standards are framed by Institute of Chartered Accountant of India. See this, in India, the standard of accounting is issued by the Chartered Accountant of India. And then ICAI constitute preparing create the accounting standard boards on 21st April 1977, recognizing the need for accounting standard in India. So worldwide are preparing the accounting standard. In India also we need for accounting standard that should be realized by the Institute of Chartered Accountant of India on 21st April 1977. ASB, Accounting Standard Boards. What is that? What is the expansion of ASB? Accounting Standard Board. The Accounting Standard Board formulate the accounting standards so that by using a accounting standard, such standard may be established by the Council of Institute in India. See the last one, the Accounting Standard Board will consider the applicable law, custom, usage, business environment and the international accounting standard while framing a accounting standard in India. So this is about accounting standards in India. Who is framed accounting standards in India? The Institute of Chartered Accountant of India issued the accounting standards in India. It is established on 21st April 1977, and while framing accounting standards in India, it consider about business law, environment and rules and regulations of the company law in India. Within that, the chapter is over. For your further studies, I attached material, PowerPoint presentation, question bank and self-evaluation test in the description. Use it. Dear parents, help your children to do their work. Thank you.
நளினி அமிர்தாவோட ஃபாதரு ப்ரீகேஜிலேருந்து 8th ஸ்டாண்டர்ட் படிக்கிறாங்க. இப்போ அது 5:30 to 6:30 வந்து கிரவுண்ட் ரன்னிங் ப்ராக்டிஸ் பண்ணிவிட்டு பாடி எக்ஸசைஸ் பண்ணிவிட்டு அப்படியே ஸ்கூல் அட்டன் பண்ணிவிட்டு மத்தியானம் மேலே மதர் தெரேசா அகாடமியில் ப்ராக்டிஸ் பண்ணுறாங்க. மெட்ராஸில் எம்இஎம்லும் ப்ராக்டிஸ் பண்ணுறாங்க. நேஷனல் லெவலில் வந்து கோல்டு அடிச்சிருக்காங்க.